Sector investing is a method that involves dividing the economy into broader segments known as sectors, which group together companies that conduct similar types of business. Understanding the framework. To understand sector investing, picture the stock market as a large department store. The entire store represents the market, and each department, like electronics, clothing, or home goods, embodies different sectors. These sectors are slices of the market's pie, each with its own unique characteristics and performance patterns. The main sectors. Typically, the market is divided into 11 major sectors. These include 1. Information technology, the computer and software magicians. 2. Healthcare, from band-aids to biotech. 3. Financials, banks, brokers, and insurers, oh my. 4. Consumer discretionary, everything we splurge on. 5. Communication services, our digital town criers. 6. Industrials, building the stuff we use to build stuff. 7. Consumer staples, the must-haves like food and toilet paper. 8. Energy, keeping the lights on and cars running. 9. Utilities, the steady, less flashy life sustainers. 10. Real estate, landlords and buildings aplenty. 11. Materials, the foundation of, well, everything else. Why sector invest. Here in Portland, you see local businesses booming within specific sectors, whether it's tech startups flowering in the Silicon Forest or the robust craft brewing scene highlighting the consumer discretionary sector. Investing in sectors lets you target growth areas. If you believe a certain part of the economy will explode, you can focus your investments there. Diversify. Even if the overall market is turbulent, it's rare that all sectors will suffer simultaneously. Manage risk. Some sectors, like utilities or consumer staples, tend to be more resilient during downturns. How's it done? You can invest in sectors through individual stocks, but that's like picking a single book and hoping you've got the whole story of Portland's amazing library system. A more common way is through exchange-traded funds, ETFs, or mutual funds that target specific sectors. This gives you a broad exposure without needing to analyze every company within that segment. Take, for instance, a tech ETF that holds companies from Apple to Zendesk. All the high-tech heavy hitters wrapped up in one tidy package. It's not all roses. Sector investing can be a ride as volatile as Portland's weather. Timing is everything, and getting it wrong can leave you soaked. There's also a risk of overconcentration if you put too much into one sector and ignore the others. Balance, as with all things, is key. To get started with sector investing, you don't need to be a market maven. Tools like Morningstar or the Sector Spider ETFs can be your map through this terrain. But always remember, just like Portland's bridges, the path to a solid investment portfolio connects various destinations or sectors to reach its ultimate goal, a well-rounded, risk-managed investment strategy. So next time you're sipping on a locally brewed kombucha and musing over the economy, consider the power of a sector investing strategy. It might just be the focused approach you need to navigate the vibrant and diverse market landscape. And here's a handy link to dig deeper into the Sector Spider ETFs. https://www.sectorspdr.com, Sectors PDR.